Welcome, everybody, to the Build It to Billions podcast, where we guide successful entrepreneurs and invors on
So
their
the
journey
big tax
from
question is
millions to
this:
billions.
how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions.
Capital facilitating more than $200 million in joint venture equity and helping acquire over $150 million in assets and so much more. Please welcome to the show with me, Janice Landers. Janice, how are we doing?
Doing wonderful. Thank you, Brett. What a powerful introduction.
Oh, absolutely. Our pleasure to have you on the show. For our listeners getting to know you for the first time, would you give us just a little bit more about your story and your current focus?
Yes, happy to do so. As you mentioned, well, first and foremost, I'm an entrepreneur that does real estate, and very passionate towards that first, because that's the secret sauce into being successful. And the other thing, like, we're excited about our Next Stone holdings and a new, unique, all commercial real estate related fund that we're just in the beginning stages of launching.
Phenomenal, yeah, and it's exciting with the deals that seem to be really available today, which we're going to be talking about what you're seeing in the marketplace and what kind of opportunities Next Stone is going to be focusing on, and then we'll talk about some creative ways to unlock some capital, but let's get started with a little bit more about your story. So, your experience and your story coming up in real estate, and how has it changed the last couple of years?
Oh my goodness. Coming up in real estate, I sold a company and signed a non-compete and had to pick a new industry, and had always had an interest in real estate, and just through a series of things wound up in commercial real estate and started out in brokerage, which was an interesting journey, and wound up doing things that, I never set out to focus, such as land and hospitality, retail. Had an industrial background and thought that's where my focus would be. And ironically, just was never in markets that were big on those plays. Fast forward, just had threatened to do this for a long time, for years and years. Have been privileged to really help build a lot of wealth for a lot of people and help protect their assets, grow their assets, and just through a series of things, got out of my head something I'd been sitting on for a number of years, and put it to paper in a spreadsheet, and have, a dynamic team together. So here we are in 2026, launching something that we're very proud of. First of all, protects capital, and second of all, gets higher yields.
I love it. I love the background from entrepreneur selling the company, non-compete, to something completely different is commercial real estate. So you have that business success with commercial real estate, which all commercial real estate is just another business. I mean, you're in the business of multifamily, you're in the business of industrial, you're in the business of medical office, you're in the business of land development, right? I mean, they're all businesses. It's just the product happens to be that specific commercial real estate asset type, which is great. So now you're launching Next Stone. So what would you say has been the most surprising, in 2026, for the deal flow and the deal opportunities? What are you seeing that you're liking for opportunities, and what's going to be the main focus for Next Stone for the fund?
What I'm seeing is, like, everybody thought interest rates would come down. and they're really not. And then I like to attend economic panels, and just from listening to a couple of leading experts in the industry, none of the metrics are there to really come down. And they're not anticipating, and, just contrary, just would have thought that would have done. So what that's doing, that's creating a unique opportunity. And just cycles overbuilt, because people could refinance their way out of trouble. And now we're seeing unique distress in asset classes, just different arenas that I haven't seen in a very long time. So hence, while the opportunity and the timing is important, especially one of the arenas I haven't seen that opportunity in is triple net assets, like single, triple net. And it's unique because your Chick-fil-A's are still super low cap rates, but some of your, like, what we call local credit or other stuff, you can actually get an 8 cap. It just depends. Beyond that, then you're getting in more risk than it's worth.
Okay, this is really good. I couldn't agree with you more, and I love the way you put that. People could refinance their way out of trouble in the past, right? And I think about Warren Buffett, and he says, you find out who's been skinny dipping when the tide comes back out. And unfortunately, for those who overpaid and didn't either time their purchasing correctly and or set debt long enough, fixed debt at a decent rate, that's sinking a lot of these ships for these assets that were purchased in 2021, 2022. And it's challenging. The mindset that we try to practice is not just a cash flow, but a tax flow mindset and a debt flow mindset. And the one I'm thinking I'm going to add to this is an asset flow mindset, meaning what gives you, the investor, the ability, any investor we're talking about here, right? The ability to get time on their side and be able to, with the wind and the waves of the marketplace and the different seasons, to get cash flow, tax flow, debt flow, and asset flow on your side. We found that a lot of people get stuck in 1031s that otherwise they wouldn't have purchased the property if it wasn't for the tax tail, wagging the investment dog, the big, they've been 1031 for so many years and it's all about to get hit. What the worst thing to do is when you're selling a business? Paying huge capital gains taxes. In fact, they're about 20 to 50% of the sale. And if your client is selling, whether you're a business broker, M&A advisor, financial advisor, they have a large capital gains tax problem. And guess what? We have a solution. We build capital gains tax solutions for sellers of highly appreciated assets, including real estate, including businesses and other assets. And we want to encourage you to take action today to learn about what solutions are available. So think about a business, think about real estate, think about other assets that have at least $1 million net proceeds and $1 million gain, and the sale is going to result in 20 to 50% in tax. So what can you do? Well, you can build a capital gains tax solution with our team. Go to capitalgainstaxsolutions.com or click on the link below to get started. What's been your experience with the 1031 exchange, and has your, I'm a brokerage background by trade as well. What, if any, has changed in the last couple of years, given what we're seeing right now?
Oh, a lot. Even though the metrics are there for assets, finding them aren't in abundance. And it's just a unique time. And I'm actually seeing people like not being able to perform and get what they want. And that's created needs for other different type exchanges. And, it's just, especially if, like, let's say they had a stabilized single triple net and they have some debt to replace, because that's been the trickiest. And they had the debt before interest rates went sky high. that's where they're getting bit because they can't acquire the same type, like the metrics are just different. And some people think outside of the box, some people don't. And just, because real estate is one of those industries that you have to be nimble. And because it is cyclical. Now the cycles used to be more predictable. Now they're not. Like a lot of reason I believe they've been artificially propped up. We haven't had, like nature be able to take its course. And that affects things and the predictability. But, still your basic principles. Like, I would argue that, location's important, but timing trumps that. So you can have the best location in the world, but be out of the timing of the market and break your number one rule, which is acquire it right. If you acquire it right, it's forgiving to so many things. When you don't, and it always amazes me because I've been through multiple cycles, just the amnesia investors and syndicators and stuff seem to have on forgetting, asset preservation should be your first rule always. Well, if you can't buy it right, I don't care if it's the greatest location ever. If it's not priced right and you don't have multiple exit strategies and it doesn't hit some good criteria, don't you dare buy it.
I couldn't agree with you more. And I want to just kind of break down a couple thoughts here on the 1031 exchange, kind of apply what Janice was saying here. So the debt replacement must be equal or greater value. And that's the silent killer, because like if you had a 3.5%, 4% interest rate and now you're at 6.5%, 7%, 8% on the up leg, and you're having to replace equal or greater debt. It's not just equal or greater sales price. So example, let's say I had a $10 million asset and I had, $4 million of debt, right? Well, if I sell that $10 million asset, I need to now go buy at least a $10 million asset with at least $4 million of debt if I want 100% tax for, otherwise it'll be boot. Now I'm going to give you a solution to this here in a second, but realizing that this is the debt flow, you need to have a debt flow mindset, meaning how is my debt going to flow into the next opportunity? And it's not just location, it's the timing of placing and fixing that debt. Yes. Plus the timing of how long that debt lasts, and not putting, I think too many people fell into the quicksand of, hey, I'm going to get this debt that these banks are offering that are 2 to 3 years fixed, and then it's going to go adjustable. And, oh, that was just all that we're offering. Well, therefore the deal, even if it was a great location, the rents were still growing and it still made sense, that right there is a reason why it's a big red flag, because, hey, if debt flow is not fixed for longer periods of time, you can be yourself in a really, really compromised position. And I think that's so true. So the 1031 silent killer is debt replacement. Timing trumps location. I couldn't agree with you more. But the timing of the debt, the timing of the purchase, of course, it would also be the timing with the actual asset and the leases. I think the triple net is really, it can be a trap too. I mean, even these CVS's and these Walgreens, and they become these Halloween stores for the seasons. And I drive by them, and I thought that location would never go away, but they're gone. The CVS's are not there, and they have a Halloween store for a few months. I remember this, one of the best locations in California. I thought would never be vacant. Any last thoughts on that? And then I'll give you some solutions for people to think about.
Well, my thoughts on that is market knowledge. You've got to be able to analyze, are you in an area that's underserved with retail for that? Before I would ever look at that, I always think repositioning, because the CVS's, they haven't been hit as hard yet, but the Walgreens, they're all risky. And unless I could protect it, like have someone else to put in there, this is where, just the brokerage experience, has taught me how to analyze who are my likely suspects, understanding the criteria, analytics, just a lot of stuff you can apply. And can you put another tenant in there, get one in hand, or do you have another buyer to exit it to, like, because I've seen 14, 15 caps on some of the Walgreens, where it was a wild card, and there's other people like buying those portfolios. If I could stack someone in there that would take it, I would take a risk on that. Otherwise, there's no way in the world, or it would have to be in a retail corridor where there'd be a high barrier of entry, and unless you had a distressed owner or a unique situation, an experienced person would never sell it at that rate.
Absolutely. I couldn't agree with you more. So I'm going to dive into a solution now for those who are looking at 1031s and have a large debt replacement requirement. We like to do a bifurcated 1031 exchange, Janice, where we're going to do a partial Delaware 1031, known as Delaware Statutory Trust, that are typically the only ones we really like are the ones that have a large loan to value ratio, like an 80% debt, right, for 20% equity. And they're like an Amazon or a FedEx office, like they're secured by some of the biggest companies in the world. And the reason they're so high is because they're called a zero cash flow deal, meaning all of the cash flow is going to pay down the debt, and it's secured by a tenant. So the debt's not in your name anymore, but it fulfills the debt replacement requirement, which allows then the investor to either, de-risk, obviously, right? And then to go buy an asset just based upon more of its metrics, its intrinsic value. So back to the $10 million, $4 million debt scenario, you're selling a deal for $10 million, you have debt of $4 million, and you're like, gosh, I don't want to take on, 6, 7, 8% on my replacement. How about I park a portion of that $4 million or all of that $4 million with a non-recourse Delaware 1031, and it's going to cost me some equity. The equity is typically 20% of the debt. So if I take $4 million by 20%, it's about $800,000. So it will, and the investment will still be 800 of my equity. Okay, so I take my $6 million minus my 800,000, okay? And that's what I have to work with now for my next purchase. So I have about 5.2 million. So I might find the perfect 5.2 million 1031 exchange that I can buy all cash, especially for repositioning opportunities that aren't necessarily financeable, which guess what? The ones that are typically more value add are typically not as financeable, at least right now, right? So that's the mindset of cash flow, debt flow, and I'll add the tax flow here in a second as well. You want to time, but you got to get time on your side. So we as real estate investors know what would be ideal. Get the debt out of our name, get timing on our side, right? And even then, if you have all cash, you can probably negotiate that deal down more because you can close quicker. You don't have to worry about the financing contingency, right? So now maybe instead of paying 5.2 or paying, let's say, $6 million for a deal, you could get a little bit of a steal at 5.2 as an example, okay? So all of these things are going in your favor now, and you're not being restricted by this 1031 exchange. You're actually using it to your favor. So that's the next piece I will say is capital gains tax deferral, to me, makes the most sense when timing is unlocked for you. So that's one way to do it. The other way to do it is through what we like to use as an installment sale with the trust. And we like to use that in conjunction with 1031s or partial 1031s like I was referring to. And this gets timing way on your side. And I'll give you a deal story. We did a $13 million car wash sale out of San Diego for a client. And this is right at the end of 2021, going 2022. And we knew, I felt like 98% of the commercial real estate market knew that we're probably at the peak or somewhere close to it. Like, this is crazy, right? These cap rates are crazy. This rent growth has been crazy. Now, I don't think anyone necessarily predicted that interest rates would go so high, but still, we knew it was pretty much the peak. And so we said, don't do any 1031 at all. In fact, because you don't have a debt over basis issue, just get out of all your debt. Don't even use a 1031. And we put them into an installment sale with the trust. So the buyer bought it for $13 million. All the debt was paid off. At closing, they received promissory notes for the equity that was due to them. We did this for 3 partners, by the way. And then we sat in Charles Schwab, and this is the beauty. Because it's in a trust, we're not in a 1031, we're tax deferred. We went into some Bitcoin at 40,000 a coin. We went into some hotel syndications that were actually very low at that point. We went into some stocks. We went into some real estate debt funds, all tax deferred. And we've been waiting for this moment. And now we're here in 2026. And guess what they're doing? They're shopping for land values that have finally come down. And they're going to partner with the trust, which is another cool thing, to buy that land and develop car washes, all tax deferred without ever using a 1031 ever again. This is the tax flow mindset, having capital gains tax solutions that allows you to defer tax and get timing on your side. I will pass it back to you, but I'm curious, what are your thoughts on that type of approach?
I actually love that because, and I've worked both with DSTs, Deferred Sales Trust, a bunch of different stuff, because gone are the days. It's so hard to find something that aligns up where a traditional 1031 makes sense, especially, just lots of different variables. And love the tax deferment stuff, and where you can start doing that and just re-rolling it, redoing it. And that's the creativity you've got to have, so you don't earn it all, pay it all back to the government, and you can keep building your wealth.
I love it. Yeah. By the way, people want to learn more about that. And what we've been referring to is a deferred sales trust, is what we specialize here at Capital Gains Tax Solutions. You go to capitalgainstaxsolutions.com. We have a book called Building a Capital Gains Tax Exit Plan that we wrote. You can check it out on Amazon, best-selling book. And we have Kevin Harrington from Shark Tank in the book, and some other really smart people. And I have a few chapters as well. So check that out on Amazon, or go to capitalgainstaxsolutions.com. 2 other things on that. It can also be a great way to unlock capital for real estate funds. One of the biggest challenges for real estate syndicators or fund managers is the ability to not just attract capital, but unlock it. And what I mean by that, it's very different. It's one thing to say, here's my fund, here's our track record, here's inside the box what we think we're going to get returns on. And by the way, we have great deals, great opportunities. But outside of the box is people say, well, how do I get to you without getting taxed? Now, you can do the self-directed IRAs, which is a good approach. But those are a lot of like $50, $25, $100, maybe $250,000 checks. They don't move the needle that much. Our strategy allows for multi-million-dollar exits that can move the needle drastically. Like we just did a $70 million in Connecticut, a $40 million on the West Coast. These are business exits, by the way. They weren't even 1031 eligible. We've done it for Bitcoin. We've done it for a CPA firm we helped recently. So that is huge, the ability to unlock capital. What have you found for ways to, or what are your thoughts on that, to unlock capital?
I would love to, and definitely want to unlock more of that. But here's a unique thing that we're in process of working through. We've got, actually through blockchain, and we've got a professional that I've known for a long time that teaches classes on it. He's the guru, wrote a book, guru on it. And so long story short, we're going to be setting up something where we've got a vault, like for your blockchain people. They can take a loan, get monetary value on it, keep their Bitcoin or whatever it is they've got, and go into the real estate fund. Also, those that aren't, because we have a lot of high net wealth individuals that aren't sophisticated, but for the back office and paying investors, it's just crazy what our technology can do. But we are actually going to be tapping in to all the blockchain and the crypto, and be able to take that currency directly into our fund.
That's cool. By the way, I love all that. The biggest challenge for people who have Bitcoin is they want to get taxed. So in one way you're solving that, because they can borrow against. The other downside of that, though, is if it drops too far, they borrowed too much, the capital calls happen, and and I'll give you a story of this. We helped a client, Bitcoin, she bought it for 50,000 and went to 50 million in value. And never wanted to exit until we could solve the capital gains tax. And so at about 54,000 a coin, Janice, we solved the problem. We helped her exit 5 million. The coin went to 68, which wasn't great at the time because you're like, oh, maybe she lost on some upside. Then it dropped to 15,000 a coin. And so now she looks like a total genius, right? Because we exited at 54,000 a coin. Now it's jumped to 130, and then it's back down to about 80, right around there, 78 right now, I think, as of yesterday. And so back to tax flow and timing, right? And looking at these things, like to me, it's a beautiful thing when we can combine in sequence the strategies that give you timing, cash flow, debt flow in your favor, and then asset allocation flow, meaning they can go into real estate, right? That's so big. And do that all when it makes sense. Like right now, 2026 is a great time to go into real estate. We think values are gonna be much higher in 12, 24, 36 months. We do think interest rates probably, who knows, we've been saying this for a while, will likely be lower within 12, 24, 36 months. And that'll change. And all of a sudden real estate will start to surge, commercial real estate start to surge more again. So I couldn't agree with you more. We're running out of time. Are you ready for the lightning round?
I am ready for the lightning round.
Okay. Excellent. Knowing what you know now, Janice, if you could go back to your 20-year-old self, what's the one golden nugget you would make sure to tell yourself to do?
Invest sooner.
Excellent. Question number 2, what's the number one book you recommended the most in the past year?
Good to Great.
That's a great book. Question number 3, what are you most curious about right now?
AI.
What part of AI are you using the most, or what tool are you using the most?
Claude, we've been implementing with spreadsheets and presentations, and just one of our partners, super techie, and gonna be building out some more systems.
Fantastic. Next question, what's the number one leadership quote or theme that you strive to live by?
Never, never, never quit. From, oh my goodness.
Is it Winston Churchill?
Winston Churchill.
Yeah. Excellent. Next question. After all your success in helping all the people you've helped, how do you best keep a mindset and practice of stewardship over ownership?
It doesn't belong to me, it belongs to God, and I'm his ambassador.
Beautiful. Janice, I want to thank you for being on the show and sharing your wisdom with us and insights. I want to encourage you to keep using your gifts and talents to help families create and preserve more wealth, and then also develop and buy and add value to these commercial real estate properties that you're going to be a part of with the new company, Next Stone Holdings, which, by the way, if people want to find more about Next Stone Holdings, where can they go to find you more about you and the company?
nextstoneholdings.com.
Perfect. Thank you, Janice, for being on the show. I also want to thank all of our listeners and viewers for being a part of the Build It to Billions podcast. We're also streaming on Capital Gains Tax Solutions podcast and YouTube channels. And we're on this journey with you to scale it from millions to billions so we can give more all of it away to help MVPs, the most vulnerable people. I want to encourage you to take action today. If you have a large exit that's pending on Bitcoin, business, real estate, multiple millions of gains, and you want to build a capital gains tax exit plan, go to capitalgainstaxsolutions.com. Also, if you have a 1031 exchange and you want a backup plan, or you want to be able to do multiple different exits, also go to capitalgainstaxsolutions.com to get started with that. We appreciate you listening or watching out there, and we'll talk to you again real soon. Bye now.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.